Hey guys, what is going on? Welcome into the video. So in this one, we're going over the drop in stocks and what needs to happen to either set up further downside or set up a rally back higher, and then go over a bunch of individual trade ideas along with it. As always, there are timestamps in the description, and let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, we had an eventful week last week as the S&P failed back below the 4350 to 4368 key pivot zone, which then triggered downside, making it down to 4305, and then the key 4207 to 4242 support zone on Friday. Zooming out on the chart shows just how major this zone is. The S&P had a 6-month-long consolidation from December to June, and then the 4207 to 4242 zone was the breakout trigger that led to a 10% plus upside move for the S&P, which is a massive move for the index. And now it is backtesting this zone as support for the second time. This could be looked at as a possible double bottom, but is really not what you want to see for the bull case. After a good-sized rally and now all the way back down to the support means that buyers were weak and now a good amount of demand has been drained from that support zone. The S&P also closed below the 200-day moving average, which it is currently at 4258. Buyers will want to reclaim this as soon as possible, as nothing good happens for stocks below the 200-day moving average. So for the bull case into next week, buyers want to reclaim the 200-day moving average as soon as possible, and then for real upside to open back up, we'll need to reclaim the key pivot zone at 4350 to 4368. As long as below there, sellers are in control of the trend. One thing that is working in the buyer's favor though is the now heavily oversold conditions. On the 4-hour chart, the RSI indicator is sitting at 23 and below 30 is the oversold signal. As we can see, after this oversold signal, the market always has a relief bounce at the very minimum, and sometimes more than that. So into next week, I would be expecting an early week bounce. Then after that will be key to see whether buyers are able to reclaim that 4350 to 4368 pivot zone to potentially set up upside, or if it was to break below that key support zone on the downside. So now taking a look at the Nasdaq futures chart, we have a little different of a setup here. 14590 to 14610 is this very well defined support zone and would be the downside trigger on a break below there. Similar to the S&P though, this is oversold, so there is a strong likelihood that we get an early week relief bounce before anything else. If that support zone was to break though, the next major support levels below are at 14240 and then 13980 as those key levels to watch. Some type of scenario like this would be what I could see playing out in the next few weeks. We get an early week relief bounce next week, then potentially break that key support zone after that, and then find support at one of those key levels below there. And from there, if that key zone at 14590 to 14610 is reclaimed back above, this would be the false breakdown trigger and could set up a rally after that, where we could see a strong short squeeze move higher for the market. Just something to consider as an outlook for what could play out in the next few weeks and not get too biased on either side. A few things to note before we take a look at some trade setups is that it is much easier to trade the upside than the downside, especially when the market is at or near oversold conditions. So this could mean that it's smart to stay cash heavy or set very tight risk on any potential short trades. And it could also mean to stay cash heavy in just stock setups for false breakdowns or upside triggers. And I wrote about how to identify and trade the false breakdown pattern in this newsletter post, which is linked below and 100% free for those who are interested. And for trading individual stocks on the long side, the biggest thing that you want to watch for during market pullbacks or corrections is relative strength. So this means stocks that are holding up much better than the indexes, either going sideways or moving higher when the broad market is falling. Stocks that do this will often explode higher once the market pullback does end. A perfect example of this is Celsius, ticker symbol CELH, from 2022. So from January to June of 2022, when the market was crashing, Celsius stock held up great and consolidated sideways for the whole time. And once the market finally bottomed, it got that explosive move higher and went on a 90% plus run in just 2 months, and obviously has moved much higher since then. So relative strength action like this is what you want to look for during market pullbacks, as those will often be the stocks set up to explode higher once the market does move back up. There's no rush to enter stocks like this though, as price action and everything will be choppy during those market corrections, so just keep an eye on the indexes, and once it looks like a potential bottom, that is when you take a stab at those long entries. An example of what you want to avoid is trying to dip by falling stocks such as Tesla. We've been talking about this multi-year wedge pattern for a while on this stock, and it broke to the downside after missing on earnings last week. You'll probably see a relief bounce soon since it is very oversold here, but when long-term patterns like this resolve, it is often very violent and chances are it ends up moving a lot lower from here. For those long-term holders of Tesla who loves buying dips, it would be smart to wait longer in my personal opinion, as this is a very ugly technical look for the stock. So now taking a look at some relative strength stocks, Palantir, ticker symbol PLTR, is one that has held up surprisingly well and is also building out this potential cup and handle pattern. 16 is the key support level to hold on the downside, and above the trend line at 17.8 to 18 currently would be that breakout trigger to start the leg higher. Now the setup could easily fail if we see continued downside in the market, but just one to keep on the watch list as a potential breakout setup with high relative strength if it continues to hold up. Another one is Elastic NV, ticker symbol ESTC. A few weeks ago it had a large gap up on huge volume above 71.29, and since then has showed big time strength versus the market and built out a nice consolidation / bull flag. Another one to keep a close eye on moving forward if this strength continues, and the upside trigger for this would be above 83.5, which could then set up the breakout and leg higher towards 96.6 to 100, the next key resistance zone above. Adobe, ticker symbol ADBE, has held up best out of the mega cap tech stocks and has been building out this bull flag between 500 to 506.5 support and the 570 resistance and breakout level. This is a very explosive looking setup. Once the market supports it, we could have a strong breakout and leg higher above 570. And Crowdstrike, ticker symbol CRWD, has been another very strong name and recently broke out above the key 162.3 to 168.7 zone. For this, I'd be watching for it to either build out a consolidation or bull flag next, or a pullback to retest that 162.3 to 168.7 zone as new support, and that would be an attractive dip buy opportunity there if this strength does continue, and the next big upside target above there would be at 205.5. So that is what I'm watching for next week and beyond from the stock market and those individual stocks. You want to keep an eye on those relative strength names because those will be the ones to explode higher once the market bottoms from this pullback. And thank you for watching. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and I answer any questions you have in there. I will catch you all next time. Good luck trading this week, and peace out.